Hello and welcome to Buy, Hold, Sell. My name's James Marley and we are talking on the afternoon that the US presidential election results roll in. Visiting us from London, especially coming for this show, Peter Hall from Hunter Hall. Peter, thanks for coming in.
Greetings, James.
And Steve Johnson from Forager Fund. Steve, great to have you back on the show.
Thanks, James.
Peter, I'll start with you. We had an interview with you in London about 6 weeks ago, and you said one of the big macro risks that you were looking at was the real prospect of Donald Trump becoming the US president. As we talk today, it looks like he is going to end up as the president of the United States. Tell us a bit about why you're concerned of this potential outcome and what you think it means as we sit here today.
Well, I'm absolutely flabbergasted by the result. We had planned for it, but here it is. And I think that the issue is that Trump is a crook. He's always been a bad person to deal with. He has no experience of government. He's an isolationist, so he doesn't believe in global trade. And the global security situation is now all thrown into uncertainty, and he will be fiscally profligate. He is a profligate spender in his own activities, doesn't believe in paying his debts. So basically all the pieces have been thrown up into the air, and we've got a very inexperienced person running the ship. And that's a recipe for disaster in my view.
Steve, it was a two-horse race. The US market looks like it's stopped limit down 5% in anticipation of this result. Should we have been so surprised about this outcome?
Well, I think surprise is fair enough, but our job as investors is to think about events, however unlikely they may be, and make sure that your portfolio is not going to get blown up by it. So we have been thinking about this as a potential risk. I think it's been amplified over the past 12 months as you've seen this unhappiness towards the political elite, and the Democrats made the unforgivable now mistake of putting someone forward who epitomised the political elite, and there's been a massive protest vote. And while everyone's saying I don't understand how all these people could have voted for Trump, I can understand how they voted against Clinton. And I think that we're in for a very interesting time, and I don't really think anyone knows what is going to happen once he gets in there. It's very clear that he's said a lot of things that he thinks he's going to appeal to certain parts of the population. Is he actually going to do those things? Can he do those things? Even the Republican Party that looks like it could control both houses here potentially. So the ability to get a lot of things through there, will it actually happen? Will they support the things that he wants to do? It's very difficult to know what that's going to look like.
Okay. Peter, you mentioned Trump is an inexperienced politician. As the leader of the free world, so to speak, what do you think are some of the downsides that could potentially come out of Trump as president? Where do you think it goes from here?
Well, I think it's very important for world leaders to be able to communicate with each other and world institutions to communicate with each other. And what we've had since the GFC is basically everyone working together to maintain economic activity and maintain the relativities between interest rates and currencies, which then leads through to employment and economic activity. And what I'm worried about is that Trump will do things without consulting the rest of the world leaders, and strange things might happen to currencies and interest rates, which will then have big spread effects on the economies of the rest of the world. Trump doesn't believe, or he does not feel he needs to worry about the Chinese economy or the Japanese economy or the European economy, but the world is actually tied up into a very complex matrix of relationships, and these all need to be working together to get the best outcome for everyone in the world. And Trump is an isolationist and doesn't worry about those things.
We've seen the pricing on the prospect of a US interest rate hike, which was close to 80% prior to the election, come down to, I think it's sub 30% last time I checked. How much of an impact is this likely to have on the trajectory of interest rates out of the US, which we've seen has had a big impact on bond rates and what people's expectations were on that front?
Yeah, I think we're going to see interest rates go up for sure. Interest rates really should be around 4 or 5%. They're basically at 0 or 1%, and we're going to see holes blown into bond portfolios. Retirement funds, etc., are going to really be in a lot of trouble.
So you think rates rise on the back of this?
Rates will rise on the back of this, I believe.
Okay.
Yeah.
Steve, Brexit it's a relatively recent memory for a lot of us. There was a big sell-off, but it was also effectively the catalyst for quite a strong rally in risk assets. Is there a chance that 6 and 8 weeks down from where we sit today, we look at a similar scenario?
Look, I think there are some similarities in that we don't actually know what this is going to look like until well into next year. You know, you'll have an inauguration in January. You're not going to see any policies even try and get put forward until well into next year. So you probably get people in 2 weeks' time sitting down and saying, well, the world hasn't changed yet, and therefore I'm more comfortable. It's interesting that the markets have bounced back in the UK, and Peter will be more over this than I am, but we own quite a few small domestic stocks in the UK that have not rallied as much at all. And I think people are still quite concerned about the longer term consequences for the UK economy and how this is going to play out. And I think you'll see some of the same thing in the US. There's still going to be concern there around how this plays out long term. I think the interest rate things is probably the biggest issue for markets over the next few years. You know, so many assets are priced for long interest rates forever. Janet Yellen is probably very concerned about her job with Trump in. Yes, I understand. I think they will put a rate rise off in the short term, but I was really surprised to see long bond rates fall as the Trump victory became more likely today, because I think
he's been an advocate.
The logic behind higher long-term rates with a Trump government seems pretty compelling to me. So maybe it is just a rush to safety that people are running out there and buying bonds because it's the safest asset. But I think that dynamic of longer rates, and it may have happened whoever was in government. I think it's more likely now, and it's the really big theme that I can see causing problems for a lot of asset classes around the world for a long time. You know, we could have 10, 15, 20 years of what's happened in the past 10 years unwinding.
Okay. Both global fund managers. Peter, you have an allocation towards the US. What's the from an investment universe, what sort of opportunities sit in that market, and does this throw up another opportunity to go and look at some of the stocks that you might like at new valuations?
Yeah, we just own a couple of technology stocks in the US, and we've got our cash in US dollars. Our actual asset structure is we've got about 15% of our assets in gold, shares, and about 25% in cash, and about 60% in equities. And what we like are new technology companies, gold companies, a property broker in the UK called Foxtons, UK exporters. Argentina is quite interesting. There are little pockets of opportunity around the place, but in general, most of the market is very, very highly valued. I mean, I think the PE on the US market is 26. That's a nosebleed level of valuation, and I think we're going to see a sharp sell-off in the US market.
Steve, the technology stocks in the US have been a massive contributor to the index. Global players like Facebook, Alphabet or Google, the likes of Amazon, who we've been hearing are planning to make their way down to Australia. They also, are dominant players out of the US. From a technology front, they seem to have been going from strength to strength. What's your take on that part of the US market?
Look, I think some of these businesses are going to be the global giants of stock markets for a very, very long time to come. We're a little bit like Peter in that the first thing I say to the guys is where do we have an edge? Where do we think we can know more than other people? And you sit there and you look at a Google and you say hundreds of billions of dollars in market cap. Can we really know that stock better than other people know it? But it is a holding in our portfolio, and it's something that we've made an exception for, because I feel like that the take that they are taking of advertising dollars around the world, I still feel like it's got a long way to run. I feel like the advertisers haven't yet worked out how best to spend their money online. They're still stuck thinking about the way they've done things for the past 20 years. And for a business that, its third quarter results were out a couple of weeks ago, it is a giant business. It's still growing at 20% per annum. And I can see that for a few more years yet, and it's a very undemanding multiple that you're in a market that's 26 times earnings, and Google on the underlying business is trading at 18 times, Alphabet, I should call it by its proper name now. I think that's one example of a stock that we like as a core holding in our portfolio we want to hang on to. Some of the other stuff looks pretty expensive to me. I can make a case for Facebook, but it's too expensive for us at the moment. Amazon.
So just on the US in general, are you seeing the same thing that Peter's seeing, just generally it's looking quite expensive?
Absolutely, and we are massively underexposed to the US, which might be a good thing over the next few weeks, but it's not intentional around Trump. It is just purely on valuation. We've been having a really good time of it in Europe. We've been making a lot of money there over the past 18 months, finding really good businesses that are going to grow that you can buy at really attractive prices. And for me, that you find the right business in the right place, and you take all of this concern about the macro out of it. If that business can perform well over a long enough period of time, you'll do well.
Peter, we'll stay on Europe. You were on the ground during Brexit. Can you talk to us just a little bit about how it's played out post, and what, if there's any lessons that we can take from that experience?
Yeah, I think Brexit is an example of how the world works. You've got a metropolitan elite who have bought into the social democratic model, which basically involves trying to maintain high living standards, welfare state, etc., etc. And then you have a huge population who feel disenfranchised. And actually what happened after Brexit was that there was despair amongst the metropolitan elite and joy amongst the general population. And the academics and the economists were calling a down in the economy. And in fact, they've had to keep on raising their expectations for the British economy. So it went from down to plus 0.8 to plus 2.1 for 2017, because there's a huge feeling of relief that we're moving away from a model that does not deliver for most people to a new model. We don't know what the new model is, but we're changing. And the same thing is going to happen in America, I think. But I'm not sure about consumer sentiment. It may be that all those guys in Ohio and Michigan and Wisconsin who voted for Trump feel fantastic and get out their checkbooks and start spending money.
The geopolitical agenda and potential risks don't finish with the US election. There's more to come in Europe. What's your sense from the Brexit experience, how other parts of Europe are going to view that vote and that voice that's been given to the people?
Yeah, there's massive political change coming in Europe. You've already got, the mayor of Rome is a member of the Five Star Movement. You've got Frauke Petry, Alternative for Deutschland. Angela Merkel will probably get kicked out. Marine Le Pen is like one terrorist incident away from being the president of France. So there's really serious change underway amongst all the big players. Italy is under great pressure with the euro, which has caused mass unemployment, and there must be a change to the euro, and there will be a change to the institutional arrangements in the European Union as well, I'm sure.
I think there's a chance that we look back and say 2016 was a really important year for the political elites recognising that something needs to be done here. The euro just can't go on like it is with double-digit unemployment rates and a lot of people having stagnant incomes over a very long period of time. And you may see a response from the more moderate mainstream parties to this that, look, if we don't do something about it, if we don't come up with concrete policies that are addressing these concerns, then we're going to become obsolescent. So I think you'll see a reaction whenever you go through something like this and there's a big reaction in one way, you'll see a response to that reaction, and it may be a good thing for the world 10 or 15 years down the track.
The British government is a model for how to do this. They've basically said, we are not going to allow uncontrolled mass immigration, and we're going to put the pedal down on economic stimulus. We're going to have all these big public works programs, so the third runway at Heathrow, nuclear plant, high speed 2, housing. I think that's going to be the response of governments, is to actually crank up the spending.
Just to wind up, just as a message for people thinking about their portfolios and investing amid this environment, years of experience, tell us how you thought about things today.
Well, we planned our portfolio for Trump to win, so we had a lot of cash and we had a lot of gold stocks. And if there are three main asset classes, they're all fully valued. Bonds are at 5,000-year highs. Equities are at 26 times, and property is very hot in many markets. So there's nothing wrong with cash and gold, and let's just see how things evolve over the next couple of years. Let's preserve our capital. Let that be our focus rather than trying to make more money.
Steve, something to add to that?
One sector that we've been looking at a lot over the past few months, haven't done anything in yet, but is the US financials. My friends who work in the space are saying that Citi and JP Morgan are the only real investment banks left out there from a trading perspective, and that the margins they're making there are quite good. Relative to the rest of the market, again, those financials are trading at very low prices. And I think the one thing that Trump and the rest of the Republicans will agree on is amendments to Dodd-Frank and probably less bank bashing over the next 4 or 8 years, and they're reasonably attractively priced. So we need to accelerate the work that we're doing there. You're never going to get super confident with financials. It's a risky space, but I do feel like it's one space in the US that there's not a lot of optimism about, and that there are some, I think, quite attractive long-term businesses in.
Okay. Well, there's certainly change in the air. It sounds like hanging on to some capital, let the dust settle, and keep your eye out for a few bargains.